You know, trying to get your head around UK car tax can feel like you're trying to solve a puzzle that keeps changing. The rules are complex, they seem to shift all the time, and the latest 2025 budget has just thrown some of the biggest curveballs we've seen in years.
So, the big question on everyone's mind is, are you about to pay more? Well, for millions of drivers, the answer is a definite yes. But, and this is the really interesting part, hidden inside the new rules are some pretty surprising ways to save money, especially if you're thinking about getting an electric car. Understanding this could literally save you thousands of pounds.
To help cut through all the confusion, we've teamed up with the experts at My Tax Accountant. They've gone through every single line of the new budget to put together this clear, no-nonsense guide on what these changes are really going to mean for your wallet.
Okay, so let's start with the basics. Before we jump into all the new rules, what exactly is this tax that we all have to pay?
Well, its official name is Vehicle Excise Duty, or VED. And here's a quick mythbuster for you. A lot of people still call it road tax and think the money is just for fixing potholes. That hasn't actually been true for decades. The roughly £5 billion collected every year from VED goes into one big government pot, funding everything from the NHS to our schools. So it's less of a road repair fee and more like a license to use the public roads.
Right, here's where things start to get a bit complicated, but stick with me. The single most important thing that decides how much VED you pay is when your car was first registered. The whole system is basically split into 3 different eras, and each one has its own set of rules. Let's break them down one by one.
First up, if you're driving a car from this period, this system is refreshingly simple. It doesn't care about CO2 emissions at all. That wasn't really a focus back then. It's all about one thing and one thing only: how big your engine is.
And you can see just how simple it is here. There are only 2 bands. If your car's engine is 1549 cc or smaller, think of a classic Fiesta or an old VW Polo, you'll pay £220 for the year. If the engine is any bigger than that, it's a flat rate of £360. No complicated sums, no digging for emissions data. Simple as that.
Now, let's move on to the next era. From 2001, the government's priorities changed in a big way. Environmental concerns were suddenly front and center, so the tax system got a complete overhaul to encourage people to buy greener cars. This is when CO2 emissions became the name of the game.
And that led to this much more detailed system you see here, with 13 different bands from A to M. The logic was really simple. The less you pollute, the less you pay. For years, if your car was in Band A, it was completely tax-free, which really shook up the UK car market. But here's the first big change from the 2025 budget. The free lunch is over. That $0 band is gone. Now, even the cleanest cars from this era are going to have to pay £20 a year. It's not a huge sum, but it's a major shift in policy.
You see, that CO2-based system worked so well that by 2017, car makers had become absolute experts at building low-emission cars. Great for the planet, but it meant the Treasury was seeing its tax revenue plummet. So they changed the rules again for all new cars. This modern system has 2 parts: a one-off first-year rate based on emissions, and then a flat standard rate for every year after that.
And the crucial thing to see here is the absolutely massive difference in those first-year costs. It's often called a showroom tax because it's designed to hit you right when you buy the car. As you can see, a zero-emission car pays a token tenner, but a high-performance car that's putting out over 255 grams of CO2 gets hit with a frankly staggering bill of almost £5,500. It's a very powerful nudge. But what happens after that first year is over?
Well, after that first payment, things get a whole lot simpler. From year 2 onwards, almost every single car registered since April 2017, whether it's petrol, diesel, or hybrid, pays this one flat rate. And for the 2025/26 tax year, that standard rate is £195.
Okay, now for the main event, the absolute headline news from the 2025 budget. This is the change that's going to impact the fastest growing part of the car market: electric vehicles. For years, EV drivers have enjoyed the huge perk of paying zero car tax. Well, that is all about to change. Stay with me here. This next point is going to affect over 1 million drivers.
The policy could not be any clearer. The era of tax-free driving for electric cars is officially coming to an end. The government's view is that as EVs become more common, they need to be brought into the tax system to contribute just like everyone else. The incentive did its job of kickstarting the market, and now it's being phased out.
The free ride has ended.
So how is this actually going to work? It's basically a three-part plan. First, any brand new EV registered from April 1st, 2025 will pay that lowest first-year rate of just £10. Second, from its second year, it'll move on to the standard £195 annual rate. And third, and this is the one that's going to catch out current owners, if you already own an EV registered between 2017 and March 2025, you'll also start paying that £195 standard rate from your first tax renewal after April 1st.
But that's not all, and this is where things get really interesting, especially for anyone buying a new car. Let's talk about the expensive car supplement, which most people just call the luxury tax. This is one area where the new rules have created a fantastic opportunity to save a lot of money, if you know what to look for.
So what is it? Well, it's an extra £425 a year on top of your standard VID for cars with a high price tag. And here's a pro tip. The key phrase is list price. This isn't the price you haggled with the dealer, it's the official recommended price set by the manufacturer before any optional extras are added. You pay this surcharge for 5 years from the second to the 6th year of the car's life.
Now, the 2025 budget has introduced a really key change here. For petrol and diesel cars, the luxury threshold is staying at £40,000. If the list price is just a penny over that, you pay the extra £425 a year. But to soften the blow of bringing in VED for electric cars, the government has created a new, higher threshold just for them. From April 2025, the luxury tax will only apply to electric cars with a list price over £50,000.
And this is the real golden nugget in the new rules. This change is a huge deal. Let's say you're a small business owner in London, looking at a new EV with a list price of £49,000. Before this change, you'd be hit with that £425 annual charge. Now, you avoid it completely. Over the 5 years, that's a direct saving of £2,125. It's a massive, targeted incentive.
We've covered the past and the present, but the government is already looking ahead to the next massive shift in how we're taxed for driving. With fuel-duty income set to fall off a cliff as we all switch to electric, the Treasury needs a new, sustainable way to bring in money. And their answer is to move towards a pay-per-mile system.
Now, this isn't just some vague idea floating around. It's official policy in the works. HM Treasury has confirmed that a new system is being developed to make sure that all drivers, no matter what powers their car, contribute fairly based on how much they actually use the roads.
The proposed system is called EVED for Electric Vehicle Excise Duty. This new setup is specifically for electric and plug-in hybrid cars and is currently scheduled to launch in April 2028. This is the long-term plan.
So how will it work? Well, the proposed rates are 3 pence per mile for pure EVs and half that, 1.5 pence per mile for plug-in hybrids. The idea is that you'll declare your estimated annual mileage when you pay your VED. This will then be checked at your annual MOT test. And a key point the government has been keen to stress is privacy. This will not require a black box or GPS tracker in your car. So what does this actually mean for an average driver? Well, the average UK driver does about 7,000 miles a year. At 3p a mile, that works out to £210, which is remarkably close to that £195 standard VED rate. That suggests the government is aiming for this to be a straightforward switch, not a tax hike. However, if you're a high-mileage driver, your cost could go up quite a bit.
Phew, okay. We have gone through a lot of detail there, haven't we? We've traced car tax right from the old days of engine sizes all the way to the future of paying per mile. So let's boil all of that down into the key numbers you absolutely have to know.
Here are the figures to lock in your memory. £195 is the new reality for most EV drivers. £50,000 is that all-important new luxury threshold that creates the big saving opportunity. £425 is the annual penalty if you cross that line. Looking to the future, 3 pence per mile is the number to watch for the EVD system. And the single most important date is April 1st, 2025. That's when the clock starts ticking on almost all of these changes.
Now, it is absolutely vital that we say this. The information in this analysis is for general guidance only. Tax rules are complex, and everyone's individual circumstances are different. This should not be used to make financial decisions without getting proper professional advice.
For that tailored, expert advice, you really should speak to a qualified professional. The team at My Tax Accountant, who developed this whole analysis, can guide you through these changes personally. You can reach them by phone on 0208-570-8531, or you can email them at info@mytaxaccountant.co.uk. They'll make sure you're making the smartest financial choices for your situation.